All right, once again on Business Incorporated, we have to redirect our DSTV viewers to our Federal Capital Territory in Nigeria. That's Abuja. Day 7 it is of commissioning the project. Today, it's the commissioning of roads B6, B12 and Circle Road in Abuja Central area, and it's around Independence Avenue at Madu Bello Way in Abuja. So for our DSTV viewers, let's head to that where that commissioning is taking place. But for our other viewers on other platforms, we'll continue right here on Business Incorporated. And we'll continue with the Fidelity Bank PLC. They've concluded all necessary arrangements to raise a total of up to 127.1 billion naira by way of rights issue and public offer. The plan culminated in a signing ceremony between Fidelity Bank and issuing houses at the bank's head office in Lagos. Obviously, this is towards the recapitalization which the banking sector in the country will be going through in about 2 years.
Subsequent to CBN's recapitalization circular published on March 28, 2024, and shareholders' approval, Fidelity Bank PLC takes a bold step towards achieving the revised minimum capital requirements for Nigerian commercial banks. This informs the coming together of the board chairman and other board members of the bank, heads of issuing houses, and other professional partners to append their signatures to documents that contain the MOU that will enable them work together on the capital raising exercise. In a combined offer, Fidelity Bank hopes to increase its capital base with over 127 billion naira through rights issued to shareholders and a public offer.
The funds raised will enable us to expand our business franchise, improve our IT infrastructure, and render better customer service experiences. We are confident that these investments will solidify our position as a leading financial institution and unlock even greater value for our shareholders.
Stanbic IBTC Capital is the lead issuing house to the combined offer.
They've heard the story. They've seen, the benefits and the return that shareholders in the bank they've been getting over the years. The offer also, provide them the opportunity to come and be a partaker of this good performance and good returns.
Fidelity Bank says it is the first among a full-fledged financial institution to undertake rights issue and public offer in its recapitalization plan.
Today we held our signing ceremony of our rights issue of 3.2 billion shares at 50 kobo each, and it's coming in at 9.25 kobo, and also for the public offer of 10 billion shares at 50 ordinary shares at 50 kobo each, and that's coming in at 9.75 kobo. And this shows that we understand the market and the Nigerian economy at large.
Besides Stanbic IBTC Capital, other joint issuing houses include Iron Global Markets Limited, Carry Asset Management Limited, AfriInvest Capital Limited, and FSL Securities Limited. Others are Future View Financial Services Limited, Iroko Capital Market Advisory Limited, Kairos Capital Limited, and Planet Capital Limited.
Well, that's Fidelity Bank, and I know that other banks obviously will be following that path in the coming days. Now let's shift our attention to the issue which is very high on the minds of a lot of Nigerians, the fiscal policy reforms. The Taiwo Oyedele-led Presidential Committee on Fiscal Policy and Tax Reforms has proposed 5 executive orders to accelerate fiscal reforms and revive Nigeria's economy. These 5 are part of about 450 policy recommendations by the committee to improve Nigeria's revenue profile and create a more conducive international competition and business environment. The executive orders, some you see on the screen, we will delve into now as we have himself, the chairman of that committee, Mr. Taiwo Oyedele, joining us virtually for this conversation. Mr. Oyedele, good to have you on the program. Good afternoon.
Good afternoon. Thank you for having me.
Awesome. So we've seen a whole lot you have done, and I guess it's also a good time to correct that impression because the executive had to share a statement to say some of those reforms were misconstrued, like it's already been approved by the executive. I'm sure you've also seen that story as misunderstanding, I believe, going on in the media, and I think that has been corrected at this time.
Yeah, that is correct. So the proposals are still being finalized and also reviewed internally. So the version that was circulated is not authorized. And so therefore, we should allow the time that is needed for those approvals to be done. And then once the official version has been approved, that will be communicated officially. So I think we should hold further conversations on those unofficial copies.
All right. So now let's talk about the official copies, your reforms, your proposed reforms. And I'm wondering why you capture these ones as executive orders. What is the process to make it implemented? Perhaps it is shorter. That's why you decided to capture them as executive orders.
Yes, so I think the priority for the government at this time is economic stability, particularly inflation, but also to do with exchange rates, GDP growth rates, creating decent employment. And so what we're trying to do is to support the fiscal authorities in their effort to complement what the monetary authorities have been doing and other policies of government, including trade, to quickly achieve those economic stability. So the reason for putting some of those measures into executive orders is to be able to speed up the implementation of those policies. Of course, we have quite a number of other policies and recommendations that are not in executive order format. Some of them are by way of regulations, and quite a number of them will be implemented via amendment to the laws and enactment of new laws, which of course, after the internal approvals, have to go to the National Assembly, and then with public hearing and all the other processes that are involved before they eventually become enacted into law.
So the VAT has been of interest to a lot of Nigerians. You said it should be an exclusive list. There's also the tax waivers. Help us to understand what you're trying to achieve with the issue around VAT and tax waivers.
Yes, as you recall, we've always had issues with VAT. And the more recent one was about a year or 2 years ago, when we had these back and forth between some states and the federal government as to who should collect VAT. So the view we have taken from the Presidential Fiscal Policy and Tax Reforms Committee's perspective is to look at what is the best practice around the world, particularly in countries where you have a federation such as Nigeria. And our conclusion is that the priority has to be what is good for the people, what is good for commerce, business, and development. And the conclusion is that you cannot be collecting VAT at state level. You may be able to do that with a sales tax regime like you have in the US, but we do not have a sales tax regime. We have a value-added tax regime. In fact, we've seen places like the EU, where in fact they decided that they did not even want to administer VAT at the country level, and they are doing it at the regional level. That's because they recognize that VAT can easily be a big impediment to trade, but if you also do it well, it can facilitate economic growth and development. So that approach is what we want to recommend for Nigeria to adopt. Of course, you would imagine that beyond even putting this in the constitution, you also need the buy-in of not only the federal government but also the subnational, keeping the ultimate objective in mind, which is we want to recommend what is good for our country and for development. At the end of the day, everyone will benefit if we do the right thing for our country.
Then you did say you're using the carrot and the stick approach when it comes to VAT, because while you are asking that some basic items be exempted from that, you are also trying to at least buffer revenue for the government on the other side.
Yes, so the idea is that VAT impacts directly on the prices of goods and services. And so you have to take so many things into consideration. One of it is you do not want to tax poverty. That's a commitment that even Mr. President has made. And you have to then ask yourself, what are those basic things that people have to consume just to survive or have, basic things of life? Of course, that would include food. Food is the biggest component of how households in Nigeria today spend their money. And then you're going to think about accommodation, transportation, and of course, education and healthcare. So our view is that on those 5 basic needs items, we need to reduce the VAT. Some of them have VAT in one form or the other. We think that we need to reduce the impact of VAT. And what that would actually mean is majority of our citizens will see a reduction in the prices of those goods and services. But that would also mean that there will be a decline in government revenue. The other thing we also are proposing is for businesses not to carry the burden of VAT, because what happens is when you place the burden of VAT on businesses, they pass it on to customers by way of higher prices. All forms of taxes on businesses are indirect taxes on individuals. That's the way it works. So we're also proposing allowing businesses to claim input credit for their VAT, whether it's on assets, on goods or services. So the combined impact of reducing the VAT burden on businesses and reducing it on the basic consumption that affects majority of our population is that government revenue will go down. Therefore, there will be a need for an upward adjustment of the rates on other items that are not in this category to compensate to some extent for the revenue that government will be losing as a result of the reforms.
The other side of that is for the revenue. I know sometime I think you got hit by some platforms, media platforms, when they said that you were asking that VAT be increased. Maybe you should explain that.
Yes, I think many people just like to either misrepresent the issues, or they just want to sensationalize, and some people just enjoy bashing anybody that is trying to do anything to help the country just because they are unhappy with the government. And we don't take those things personal. We only just appeal to people to try and understand the issues and then engage with those issues constructively, because if we make it hard for ourselves to do the reforms that are necessary for our country to move forward, we all will bear the consequences if we continue with business as usual. So what was misreported was a reporter decided that they will only just focus on the need for an upward adjustment in VAT rates. And of course, more than 90% of people would not read the content, so they just went with the headline. And it was also deliberate for the reporter to do that just when everybody was complaining about cybersecurity levy. So they just dumped it into the midst of all of that. But we moved on from that. We reached out to the reporter, who apologized for the misreporting. And for us, we are focusing on going forward rather than the past. So, but I think the explanation is simply what I said before. We want to make prices of goods and services more affordable on the basic needs for the majority of our people. And therefore, if you make an adjustment, what you also accomplish as a result of that is you make your VAT system to be more progressive, whereas it's asking for, where it's going to be asking for people with more ability to pay a little bit more. And those without the means to pay, we're asking them to pay less. So, and I think that's the right thing that we should be, encouraging at this time.
Yeah, another proposal in that is subsidizing transport for low-income staff. And I'm just thinking of how do you want to get that done? Because we did see the issue of subsidy brought about buses from the federal government, but I mean, that wasn't a solution that lasted. So how do you see this working?
Yes, government can do a lot, CNG and other initiatives, but you also have to always bear in mind that there's still millions of Nigerians that will not be able to benefit from, those interventions. And therefore, particularly from the private sector side, so for us, we thought it would be necessary to make recommendations to the government on interventions and measures that can be more broad-based and far-reaching to cover for almost anyone, whether it's a small business or large business. And the whole idea is because of the subsidy removal and the impact on inflation, as well as for flotation of the naira, we've seen increases in general prices, particularly on transportation, which is also affecting logistics and cost of goods and services. So we thought that if any employer wants to do a subsidy or provide transportation, means for their staff, or to give them any allowances to help them cope with the impact of these rising prices, such employers should be encouraged by way of additional tax relief. So it's almost like government saying, we want to share the burden with you as you're trying to help your employees, knowing very well that those employees are indeed the Nigerian people that government is concerned about in terms of their welfare and well-being.
All right, just before I let you go, I need for you to talk about this proposal of, you said FAC or the revenue to government should be shared daily and not monthly. Right.
Yeah, so these are also ongoing conversations and proposals from our committee. The whole idea being that the current way in which revenues are shared, usually done on a monthly basis, in itself creates some sort of economic distortion. And sometimes you see a spike in inflation or exchange rates just at the time of sharing those revenues. We think that we have the resources, both in terms of human capital as well as infrastructure and facilities, including technology today, to be able to design a system where whatever revenue is collected into the federation account belonging to different levels and tiers of government can indeed be credited to the accounts on a daily basis. So that way they also have regular inflow of funds to cater for the needs of their people at the state and local government level. And then you don't have the spike in liquidity that is pumped into the system over just a very short period of time. And more importantly, that would also then free up the time for the commissioners of finance across the state, and whether by extension the governors, to focus more on strategic fiscal policy issues, rather than focusing on how to share FAC on a monthly basis. Of course, there'll still be a need for reconciliation, because like you normally do with your banking engagement, is to do reconciliation, and there'll be plus and minuses here and there that have to be done. Those things also don't require the commitment and time of the most senior people in government, who should be dedicating their time to governance and policies to move the nation forward.
So looking at this executive order that you proposed, what can we expect? Do we have an idea of the timeline? What's the process, before this become implementable?
Yeah, so we are not a policy-making unit or organ. So we're only just we're engaged or appointed by Mr. President to help with recommendations. So, and that is what we have done. But we're going beyond that to also work with the policymakers to fine-tune those recommendations for them to be able to approve them. So ordinarily, what we'd expect will happen with an executive order is, because it has to do with fiscal policy, we have to get the approval of the finance minister, And of course, some of those recommendations border on issues where you need working together with even the central bank. You need some of them with Ministry of Trade. You need some of them have to do with customs, FRS, Ministry of Agriculture. So that engagement process needs to be robust enough to get everybody to buy in and support those proposals. And once that is done, it will then go to Mr. President for the final approval. Once that is done and is gazetted, of course, in the midst of all of that also, you need the Ministry of Justice. Once all of that is done and is signed by Mr. President, is then gazetted, and then it commences from the effective date as contained in the order. So a bit of a journey. I will not want to commit to any timeline because I try not to commit to anything that is not within my control. But I can say that the policy authorities are fully committed to getting this done as quickly as possible.
All right, Mr. Tao Idili, Chairman, Presidential Committee on Fiscal Policy and Tax Reforms, thank you so much for your time.
Thank you for having me.
All right, those reforms will affect you and I, affect our pockets, affects the price. I mean, imagine if VAT is removed on the food and all of that. It will certainly affect all of us. Let's take a break now. When we come back, we'll head to the market. I heard ECB has gone the way of the Bank of Canada. And Nitya will be here with that and a whole lot more to stay with us.